the valuation of a vacant land. I'll first do the valuation of vacant land. That is the important concept where understanding the solution is very difficult. We'll do that first and then do the examination problem. Okay, it's a very, very interesting issue. How accountants view balance sheet itself is challenged now. Okay, that is the way of valuing assets and all is now challenged. They call as fair value or not. In which how to value natural resources as a resource and not an asset is what is going to be the main theme. Today we'll be discussing valuation of a vacant land. After I discuss dividend yield and all, I'll discuss valuation of an oil reserve in the subsequent classes. Can I proceed or not? Now, this vacant land valuation we had in our workbook for a long time, but in the second previous attempt, they asked this in the examination for 8 marks. Now, the question, the same question, only with the number has been what? Changed, has been asked for the 8 marks. So, don't undermine what is discussed. Something is there in the syllabus should be what? Discussed. Okay, but examination answer and all, they don't tell you the logic. One may not know what the solution is all about. A lot of discussion is involved in understanding this particular concept. It will give you a very new idea about how assets should be viewed and not in a traditional way, in what a modern way assets should be viewed is what we will be learning through this valuation of a vacant land. Can I proceed or not? Now, give the heading, valuation of a vacant land. We are going to use the risk neutralization model for doing this particular problem. Valuation of vacant land. Yes, switch on or switch off? Switch off, huh? Okay. Take page number 116. Take page number 116. It is a chapter called Application of Derivatives. The chapter I have given the name called as Application of Derivatives. Page 116. In that I have two problems. One is, that is three problems exactly. One is capital budgeting and derivatives invest value of a vacant land is question number 12. Valuation of oil reserve is question number 13. I think question number 14 is valuation of a patent. Okay, patent valuation also is very similar to oil reserve. These two will be doing it in the later stages where some more discussions are required. Okay, now we'll complete the first part for which we have all the knowledge necessary to understand that. That is question number 12. That is valuation of real options given or not. That is something about valuation of a vacant land. Okay. You can go and try also examination problem. This is our workbook sum. Similar sum is given in the examination. I think the second previous attempt, not this exam, the second previous attempt, the question has been asked. Can we start or not? Now, please. A builder owns a plot of land that can be used either for 18 or 30 apartment buildings. The construction cost for these alternatives are rupees 18 million and 34 million. 18 million means how much lakhs? 180 lakhs. 10 million is equal to, so 10 lakhs is equal to 1 million. 180 lakhs and 340 lakhs respectively. Price per apartment currently is 1.2 million, that is 12 lakhs. Yearly rental net of expense per unit is 0.10 million, that is 1 lakh. And the risk-free rate of interest is 9% per annum. If the market for the apartment is buoyant next year, each apartment will fetch 1.5 million. On the other hand, if the market for the apartment is sluggish next year, each apartment will fetch only 1.1 million. What is the value? That is 11 lakhs. What is the value of the vacant land? Assume that the construction cost will remain unchanged. Use risk neutral method is the question that has been asked. Okay. Now, I'll just give you some time. Go through the facts of the question before I start with our discussion. Please read the question quickly. Shall we start or not? No. See. Land is there. Land and building is there. That's what I'm saying. Tell me, which you like most? Which is having more value? Land and building. Which having more value? Land or land and building? Okay. Now, we question that particular premise itself. I say that land as such is having more value than what? The land and building. The reason is, land is a natural resource, land and building is a developed resource. When I have a developed resource, I have a restricted use for that. So no, I don't have option, because in a land I have constructed 10 apartments means that's all. I can earn rent only from what? 10 apartments. The building has been what? Constructed. In that case, when I have a developed resource, the resource is developed in some line, I can only get a benefit what? From that particular angle only. Yes or no? But if I have a natural resource, I can use resource in any way I want. I have an option in that resource. Everybody, are you following what I'm saying? If the option is beneficial, surely the land should be having what? More value. You can say, sir, when you have a building, why can't I demolish? There's a demolition cost involved. Yes or no? What I'm saying? In that case, so we are viewing all assets differently. Okay, we feel that a natural resource has got what? A more value than what? A developed resource. That's this another way of what? Looking at into things. I say it need not be always so. It can be so. Only it's going to be proved through this particular sum. Everybody following or not? So now tell me, which is having more value? A natural resource, a developed resource? A natural resource. Okay, can I proceed or not? No. Same way, oil reserve is having much more better value than a developed oil field. Similarly, a pattern which is in development is having much more value than what? A developed pattern. You will follow what I'm saying? Because something which is raw has got options. Something which has been developed, we restrict that option. That option value is gone, is what we are trying to put it here. That is what is called as a real options in what? Natural resources. Please tell me, are you following? Now let us see how this problem should be viewed. Okay, now let's take the facts of the question. I cannot explain the entire scheme of things in the beginning because it requires a lot of discussion to make you understand the wavelength of the question. We will do it together, the answer. Don't think ahead of me. Think along with me. At the end, I'll give a conclusion. At that time, I'll be having good grip over what? The entire solution. Are you following or not? Before that, don't ask me doubt ahead. The reason is you may be having some missing links which may be explained what? Later. Just wait for 20 to 25 minutes. Once we complete the sum together, we'll just go and see once again a revised view of what has been done. We'll be getting a good grip. Are you following up now? Main problem is whether textbook or study material, they don't tell the reason for why all these are being what? Done. So this is a very unique way of using options to what? Value the assets. Can I proceed or not? Now, let's start with the first facts and then proceed further. Can I write the facts together or not? Now, write down facts. Question number, question number 12. You also write the page number. Page number 116. 116. Question number 12, page number 116. Can I start or not? No. First write facts. Okay. See. Question is, there is a land. There is what? Land. On that land, I can construct a 18 apartments building or what? 30 apartment building. Anything I can do it. Yes or no? Now, in that point A, construction cost. Point A is construction cost. You have 18 apartment and then what? 30 apartment. You need not calculate, they are given. What are the construction cost for 18 and 30 apartment? How many days here? That means what? 180 lakhs. And the numbers in what? Lakhs. 180 lakhs. Next is what? 340 lakhs. Construction cost. Right or not? Next. B. Selling price. If I sell the apartment today, please tell me, if I sell the apartment today, I can sell for how much rupees here? 1.2 million. Cut up, it's going to be how many lakhs here? 12 lakhs. I sell the apartment today, the spot price of the apartment is how much rupees here? 12 lakhs. See, future spot price. Suppose I sell after 1 year. I sell after how many years? 1 year. The price can be either 1.5 million or what? 15 lakhs. Or it can also be what? 11 lakhs, 1.1 million or 11 lakhs. Are you understanding or writing or not? Now, same apartment, we expect the price to be either 15 lakhs or what? 11 lakhs. Ennappa, right or not? Next. Point C or D? D. Rent. What the rent of 1 year for a building here? 0.1 million means what? 1 lakh. The rent of a building for 1 year is 0.1 lakh. Next is what? E. The interest rate. For the interest rate, 9%. The term I am speaking about is how many years? 1 year. I am speaking about a term of 1 year. Now, don't try to fit anything in. Things should be understood differently in a complex way. Some assumptions also will be made. Just along with me, let us do it. So don't think ahead again. I say facts has been written. Okay. Now, to construct a 18 apartment building, what is the cost? 180 lakh. To construct a 30 apartment building, what is the construction cost? 340 lakh. Yes or no? Now, when I sell an apartment today, what is the price? 12 lakh. If I sell after 1 year, the price may be what? 15 lakhs or 11 lakh. Rent, if I have an apartment for 1 year, what rent I can have? 1 lakh. What is the interest rate? 9%. What's the term spoken about here? 1 year. You know, this first piece after how many years here? 1 year. This is all the details given. Can we start or not? No. Forget about option, vacant land, etc. Now, I want to know what is the worth of the land as an asset. I am not viewing as a resource, I am viewing as what? An asset. What is the value of a land as an asset? Okay. Now, here one assumption is, when I say construction, I construct immediately, okay. I don't take a construction period of 2 months or what, 3 months. That's an assumption in the entire solution process. They want to only drive home a point. The construction period is what? Ignored, okay. That means construction happens what? Immediately. If I construct today, like this, the building comes. Yes or not? If I construct after 1 year, like this, it comes after what? 1 year. The exercise of construction option can be done immediately. Everybody, yes or no? Assumption is that nothing great here. You have to only discount what? The construction cost today and do the problem. That's all. Are you following on? Now, please. So now, building construction takes how many days? That is, it takes what? Immediately to what? Construct is an assumption. It may take 4 or 5 months. The time lag we'll be discussing later. Everybody following what I am saying? Now, in the problem solution, all the books, they assume construction take place what? Immediately. There's no time lag between the date of starting construction and then ending the construction. Now, that does not affect our concept. Does not affect our concept. Also, believe me. Can I proceed or not? Now, let's start doing the solution now. See. Let me value the land. Let me value this land. Somebody has to pay a price to buy this land or not. This land is for sale. This land is for what? Sale. I should value this land or not. I am a construction company. I have to value this land. How much I can pay maximum for the land? A question arises. What is the value of the land? Okay. The benefit I get from the land is the value of the land. For a construction company, what is the value of the land? The benefit which I get from the land is going to be what? The value of the land. Now, see. When I buy the land, what benefit I can get? I can either construct 18 apartments or 30 apartments, sell it, and also incur a construction cost. Yes or no? Now, write down first step 1. Step 1. Value of the land as asset. The word as asset can be understood later. Value of the land as what? Asset. Value of any asset is a present value of the future cash flow. Right or not? So value of the land as asset. Can I proceed on? Now, see. I can construct an 18 apartments. Yes or no? If I construct an 18 apartments, tell me, I can sell every apartment at how much lakhs? 12 lakhs. In how many apartments? 18 apartments is a sales. What the construction cost to be spent on that particular amount? 180 lakhs. Okay. When I buy the land, I can spend 180 lakhs to construct the building and sell every apartment at 12 lakhs. And how many apartments here? 18 apartments. Tell me what is the value? 36 lakhs. Same land I can use for what? That is a 30 apartment. A 30 apartment. Tell me, every apartment how much lakhs? 12 lakhs. Into how many apartments? 30 apartments. What the construction cost? 340 lakhs. Tell me what is the value? 20 lakhs. If I am a building promoter, I buy the land means today I will construct 18 apartments or 30 apartments or 18 apartments, and I feel that the maximum I can pay for this land is how much lakhs here? 36 lakhs. That's the benefit I derive from the so no, it is available at cheaper price. I'll buy the land because it gives me a profit. Everybody follow what I'm saying? So I feel that the land is worth how much is there? 36 lakhs because I always choose the best. So no, in that case write down the value of the land to the promoter. I hope you're all doing along with me or not. Those are not copy, raise your hand. Please copy quickly. Please copy. I'm just allowing you to do along with me. 18 apartments, 30 apartments. Copy this quickly. New things at the beginning may seem to be very confusing, but don't worry. Keep on following me. We'll get the full clarity at the end of this particular solution. Okay. Way of thinking only is different in this problem. Those not copied, raise your hand. Finished now? Now, write down. The promoter. Okay, the value of the land. Are they dictated? Okay. The value of the land to the promoter. The value of the land to the promoter is, how much rupees? 36 lakhs. The value of the land to the promoter is 36 lakhs because that is the maximum benefit he can derive out of it. The value of the land to the promoter is 36 lakhs because that is the maximum benefit he can derive out of it. That is the maximum benefit he can derive out of it. There is a maximum benefit he can derive out of it. Everybody, are you following or not? No. So what is the value of a share? Present value of the future benefits from the share. Like that, what is the benefit I get here? 36 lakhs. No need to discount because everything happens what? Today itself. I construct today building at 180, sell today at what? There's this amount of lakhs, 216 lakhs, and make how much? 36 lakhs. Only thing that can be somewhat uncomfortable is how can I construct the building immediately and sell same day, because building takes some time to construct. For the time value of money can be what? Adjusted, because I can book the order now itself. In flat promotion and all, they get the advance money what? Immediately. They pay in installment, find the time value of the receipt, find the time value of what? The payment, but you can find the value. So no. Now. Suppose the building takes 4 months to build. How many months to build here? 4 months to build. This 1 lakh will spend around 4 months or not. Find the present value of the 1 lakh and the cost of construction. Now, and I'm going to sell in what? The building. I won't sell at the end of 4th month because I always in construction industry book one orders in advance, get part payments, etc. So no, find out the present value of inflow, the discounted inflow minus what? Discount outflow will give you the value of the land. But the concept is same. Are you following what I'm saying? So please don't get worried that I'm constructing immediately and selling what? Immediately. Now, what is the value of the building? Tell me how much lakhs here? What is the value of the land? 36 lakh is a price I can be willing to pay for this particular land. Can I proceed to next stage or not? No. So, this is viewing the land as an option, as an asset. As what? Asset. I have not viewed the land as an option. I view the land as what? An asset. Because what I felt is, when I buy the land, 2 days I have to build the building. And how much? 18 apartment and earn 36 lakh. Yes or no? See, when they buy the land, nobody said that you should build it today. I can even wait for 1 year, see what market is happening, and then exercise my option to build. Yes or no? Building in a land is not a compulsion. It is only what? An option, which need not be exercised today. It can be what? Exercise on the maturity date also, 1 year in this case. What I'm saying? Are you following what I'm saying? I can even wait for 1 year and see whether 30 apartments good, Or 18 is good. After 1 year, maybe what? 30 may be better, and I can go for that. Everybody follow what I'm saying? So, when I viewed as an asset, I may undervalue, but now the land is not an asset. The land is what? An option. Land is not an asset, land is what? Option. It gives you option to construct either an 18 apartment building or what? 36 apartment building, which need not be exercised today, can be exercised even after what? 1 year. Everybody, are you understanding it or not? Now, how I value that option is the next issue. In that process, you know what mistakes we are making by saying that the land is worth how much? 36 lakhs. Can I proceed further? Now, next is step number 2. We can do it together. Payoffs at different FSPs. Payoffs at different FSPs. Payoffs at different FSPs. FSP means what? Future spot price. Payoffs at different FSPs. Don't think ahead. Let's think step by step. Payoff at different FSPs. Can I proceed or not? No. Instead of constructing the building today, I can wait for 1 year and exercise my option at the end of the first year. Yes or no? Either a call option, like what? A call option. An option to construct the building is what? Call option, and sell at FSP. Yes or no what I'm saying? So I can wait for 1 year and exercise. Yes or no? Now, after 1 year, tell me what are two situations here? The market is what? Buoyant, or the market is what? Sluggish. Open two columns. Market is buoyant and the market is what? Sluggish. Two things can happen or not. Market is buoyant and then what? Sluggish. Buoyant means I'll be getting how much lakhs? 15 lakhs per apartment. Sluggish means what? Only 11 lakhs. Both can happen. Yes or no? The market can be buoyant as well as what? Sluggish. Please. Now, come here. I have two choices. 18 apartments and next is what? 30 apartments. 18 apartments and then what? 30 apartments. I am building a payoff matrix. I'm building a payoff matrix. 18 apartments and then what? 30 apartments. Now, can I proceed or not? No. Market is buoyant. How much lakhs I get for every apartment? 15 lakhs. You know how many apartments? 18 apartments. Minus what the construction cost? 180 lakhs. They said that the construction cost is not going to change. Okay. If it changes, the change number should be written here. Are you following what I'm saying? So, I exercise this option means 18 apartments into what? 15 lakhs every apartment minus what? 180. Tell me how much it is here? If the market is buoyant, I can get 90 lakhs from buying the land and constructing the building and selling it. Yes or no? Now, next is, if the market is sluggish, I can sell how many lakhs here? 11 lakhs. How many apartments? 18 apartments with a construction cost of 180 lakhs. Innappa, right or not? Now, is equal to how much lakhs here? 18 lakhs. So when the market is buoyant and 18 apartment can give me as high as 90 lakhs and sluggish means what? As low as 18 lakhs is the payoff from the first option. Yes or no? No. Should I go for 18 or 30? 30 also possible. Yes or no? 30 means what the market buoyant? 15 lakhs into how many apartments? 30 apartments. Do along with me. 15 lakhs into 30 apartments into what the construction cost? 340 lakhs is equal to how much here? 110 lakhs. When the market is buoyant, 30 apartments can be how much lakhs here? 110 lakhs. Now, when the market is what? Sluggish, and how many lakhs here? 11 lakhs into how many apartments? 30 minus what? 340 lakhs. I hope you are doing, what is the loss here? Minus 10 lakhs. The loss is minus 10 lakhs. The loss is minus 10 lakhs. Now, understand that I will never make a loss in an option. Now, after 1 year, if the market is buoyant, if the market is what? Buoyant. FSP is what? 15 lakh. What FSP here? 15 lakh. If the FSP is 15 lakhs, market is buoyant, I'll go for 18 or 30 or 30 as like this option. Is or no? Suppose after 1 year, when I construct the building, the market becomes what? Sluggish. I'll go for 30 or 18 or 18. I'll either get 18 or what? 30. I'll never have 90 or minus 10 because I have a right to exercise. Yes or no? I have an option, not a compulsion. Everybody follow what I'm saying? So after 1 year, my payoff can either be what? 110 lakhs or what? 18 lakhs from this land as an option. Yes or no? I will never have a 90 lakhs and what? 10 lakhs because I have never committed myself to what? 18 apartments or 30 apartments. So I can wait for 1 year, either go for a 18 lakhs payoff or what? A 110 lakhs payoff. Everybody, yes or no? Can you approve that? No. See, let us imagine like this. In share and all, on maturity date, when FSP is greater than strike price, what you will do? Exercise. Otherwise, what you will do? Lapse. You make a decision or not? Like that. When FSP is more than what? Strike price, that is 15 lakhs. What I will do? I'll go for 30 apartments. I will go for what? 18 apartments. This is my option to exercise or what? Labs, whichever option I want. Everybody, I'll find what I'm saying. Is the benefit of having an option. This is a payoff after what? 1 year. Now, more you can understand, we go for the next stage of discussion. Tell me yes or no. Okay, now. Step 3. Risk neutral probability. Step 3 is risk neutral probability. Risk neutral probability. Now, don't write. I will discuss this is an important concept and then give you time to copy. Okay. Now, what is the spot price of an apartment? 12 lakhs. It can either become what? 15 lakhs or become what? 11 lakhs. Some like spot price, upper FSP, down FSP, same way having these two numbers. Yes or no? No. My first question is, this 12 lakhs, this 15 lakhs and 11 lakhs are comparable or not comparable? All these three prices comparable or not comparable? I will say these three prices are not comparable because this is a come rent price, this is to or what? X rent price. When I construct a building today, it can earn me 1 year rent. Yes or no? Having a building can give me rent. Yeah. Having a land cannot give me what? Rent. Yes or no? When I construct after 1 year, I lose 1 year rent. Yes or no? What I am saying? So this is something similar to X rent price, and this is what a come rent price. The first year rent is there inside there. This does not have what first year rent. Something similar to dividend in a share. Yes or no? That is, I have a share spot price 12 rupees, FSP is what? 15 rupees, 11 rupees, in between 1 rupee what? Dividend declared. The first is what? Come dividend, and the remainder are what? X dividend. Respond, yes or no? No. Can I handle come and X together or not? No. Either make all the three as what? Come dividend price, or all the three as what? X dividend, and then handle the solution. Respond, are you following? Now, that means the spot price should be adjusted for what? Present value of rent to get it as a revised spot price. Get as what spot price is a revised spot price, and then proceed doing the solution. Everybody understanding? You understand that? This 12 lakhs is what? Selling price. Come rent. In a person who is going to pay the price, he is also paying the price for the first year rent, because when I have a building, I can get 1 lakh rent for the first year, yes or no? If I don't have building, I have only land. An option to build building means by the time I build the building, 1 year rent has been lost in that particular option. Everybody, yes or no? So this is a come rent price. These two are what? X rent price. So made as a revised spot price, adjusting what? The present value of rent. Yes or no? The assumption is rent is received not throughout the year, but at what? End of the year. So, received throughout the year, no problem. Discount at what? The special PV factor, and we are getting the answer. Are you following what I am saying? But in all the solution in the books, they are asking the rent to be received at what? End of the year. So, discount by 1 year. Please respond yes or no. Can switch on the AC? Yeah? Yes. No. Next step is to find out what the revised spot price. Now, write down. Just copy this. 12 lakhs, 15 lakhs, and then 11 lakhs. 12 lakhs, 15 lakhs, and 11 lakhs. Shall I start or not? Now, finish writing this up. Write down. That 12 lakhs is a come rent price. How come dividend? I call as what? Come rent price. The 12 lakhs is a come rent price, while the other two prices are X rent. While the other two prices are X rent. While the other two prices are X rent. 12 lakhs is come rent price, while the other two prices are X rent. Everybody able to understand it or not? No. So the rent is like a dividend in this particular problem. Can I proceed? Next, write down. The X rent price is calculated as follows. The X rent price is calculated as follows. Write down. Revised spot price is equal to revised spot price is equal to formula spot price minus present value of rent. Revised spot price is equal to spot price minus present value of rent, which is equal to what is spot price? 12 lakhs minus, I think rent 1 lakh above 1 lakh into e power minus 0.09. And 1 year na 1 into minus 0.09 is what? Minus 0.09. Now 12 lakhs minus 1 lakh into e power minus 0.09. Examination, we did the normal discounting. We did what? Continuous because of the options. Okay, now. But we can just do other way around also, not an issue. Tell me what is the number I'm going to get? Number what is that here? How much number? Full net panni solluma 1 lakh into this number. Okay, I'll let fully 12 lakhs minus 1 lakh into what is the number? 0.99? 0.9139. Just net off and tell me what is the number? Inappa 12 minus 0.913 gives how much here? 11.0861. 11.0861. That gives 11.0861. 11.0861. This is how we normally discount. Everybody following not. That's how Hull also follows. But there's another logic also for this. Real options are not traded in stock exchange. Are not traded in what? Stock exchange. There's nothing called as margin account available. Instead of continuous compounding, or this one can also use what? Normal. Right now, next. Since real options are not traded in stock exchanges, we can use, instead of continuous compounding, since real options are not traded in stock exchanges, we can use, instead of continuous compounding, we can use instead of continuous compounding what? The normal compounding. We can use, instead of continuous compounding, the normal compounding. Everybody, yes or no? No. So examination then done under only what compounding? Normal compounding, right? Alternatively. Revised spot price is equal to 12 lakhs minus 1 lakh into 1 by 1.09. I discount by 1 year. 12 lakhs minus 1 lakh into 1 by 1.09. How much number here? It is 11.0826. 11.0826. I'm having some last 2 decimal adjustment. 11.0826. This is revised spot price. Only what revised spot price? 11.0826. I will take this for my calculation. This is only done for your information. Can I proceed or not? Now, for the number 11.0826. Please tell me, can I move to the next stage or not? Now, I will continue the same step. I am here to calculate what? Risk neutral probability. Now, spot price instead of 12 lakhs, circle and right. What is the number to be written? 11.0826. 11.0826. Everybody following up? Now, tell me, we can follow the table approach. Okay, tell me what are all the columns in the table approach for the risk neutral probability. All of you do together. First column is what? Situation. Second column is what? FSP. Third column is probability. Fourth column is expected FSP. Please. Situation, FSP, probability, and then what? Expected FSP. Can I start or not? What two situation? 1 and then what? 2. I should first write upper or lower or upper. P is for upper. 1 minus P is for what? Lower. You should understand or not? What upper FSP? 15 lakhs. What the downward FSP? 11 lakhs. What the probability? P. What the probability? 1 minus P. What the expected here? 15 into P. And this is what? 11 into 1 minus P. Numbers are in lakhs, one can understand. 15 into P, 11 into 1 minus P. If I total, I get expected FSP is equal to 15P plus what? 11 minus 11P. Accepted? 15P plus 11 minus 11P. Is the expected FSP? Tell me yes or no. Now, this should be equal to what? Spot price compounded to future. Everybody accept or not? Right now, next. future value of spot price. Future value of spot price. What is spot price? 11.0826. 11.0826 into 1.09. I compound using normal compounding 1.09. Normally they use what? Continuous e power 0.09. This is followed by the exam. We do it. Okay, 1.09. Tell me what the number I'm going to get? 12.08. Correct? 12.08. Future spot price is 12.08. What I should do? Equate this to what? Future value of spot price. Now tell me 15p plus what? 11 minus 11p is equal to how much? 12.08. Now, are you all following what I am doing? Now this is going to be what? 4p. Yes or no? 4p is equal to 1.08. P is equal to 1.08 divided by 4. Point? P is equal to 0.27. Yes or no? Now, that means what is 1 minus P is equal to what? 0.73. 0.73. The probability of the apartment price being 15 lakhs is 27%. The probability of apartment being what? 11 lakhs is 73%. True or false? False. This is not a probability. It is what probability? Risk neutral. Always I said. Because if I say probability, I cannot calculate. I have to only assign it. Everybody understanding or not? That discussion can be referred to later. Now, up to this, everybody yes or no? Now, next step is this step number 3. What? Risk neutral probability. Step 4 is what? Future value of land. Step 4 is what? How we have land is an option, asset, option. We calculate future value is option or not? Like the future value of land. Write down. Future value of land. Step 3 or 4? Step 4 is future value of land. How we value options? Same way. Now tell me one by one. First column is what? Situation. First column is situation. Second column is what? FSP. Second column is FSP. Third column, value of land. Third column is value of land. Fourth column, probability. Fifth column, expected value of land. Correct? Call option, how we have the second step here? Situation, FSP, VC. We have what? Value of call. And then what? Probability, expected VC we have. Right or not? Same way. Now, what are two situations? 1, 2. Market can be buoyant. Market can be what? Sluggish. What is the FSP? 15 lakhs. What is the FSP here? 11 lakhs. Now, you should tell me, when the FSP is 15 lakhs, I'll exercise 18 apartment option, 30 apartment option, 30 apartment. Tell me what is the value of the land? 110 lakh. The land can be having a value of as high as 110 lakh. Yes or no? Now, in the case, what is the value of the land? 110 lakh. When every apartment price becomes 15 lakhs, the value of land is how much? 110 lakh. Suppose market is sluggish. In that case, we'll exercise 18 or 30 or 18. What is the value of the land here? 18 lakhs. The value of the land is how much lakhs here? 18 lakhs. From here I exercise option. Respond yes or no. 18 which is going to be sluggish and 110 is going to be what? Buoyant. Are you following what I am saying? Now tell me, what is the probability that the land value can be 110 lakhs 0.27? What is the probability of having the land value as 0.18 lakhs 0.73? 110 into 0.27, it can be 110 or what? 18. So 110 or 18 average, average. What average? What is the number? 1%? 29.70 lakhs. Next is what? 13.14 lakhs. Now, if I add, I can do what? The expected value of land is how much? 42.84 lakhs. This is the value of the land today, after 1 year, after 1 year. Is the value of the option after 1 year. What is the value of the option today? Present value. Discount using risk-free rate because the probability is a risk-neutral probability. Everybody yes or no? No. This is not a land. Land is an asset, not an asset. Land is what? An option. Okay, right now. Next, step 3, step 4 or step 5? Step 5. Value of the land today. Value of the land today. So present value of land is equal to 42.84 lakhs into, I use normal discounting for real option, can you use normal discounting into what? 1 by 1.09. There's nothing wrong if I use continuous discounting also, but I use what? Normal discounting. Tell me the number what I'm having. What about it? 39.30 lakhs. 39.30 lakhs. 39.30 lakhs. Everybody, answer over. What is the value of the land here? 39.30 lakhs. But my discussion not yet over. 15 minutes solidly left. Important. We'll lose track of this discussion. Please, let us complete it. Now, understand that you go and look at the suggestion answer. What you have done, nobody understands. So look at any textbook. This should be understood in the proper wavelength or sense. Can I say? Now, you are a normal traditional valuer. You say the land is what? How much rupees? How much rupees? 36. If you view the land as an asset, if you do the land as an what? Asset, you put 36 lakhs as what? The price for the land. Yes or no? When you view the land not an asset, but as an what? Option, then the land is worth how much? 39.30. Because when I view the land as an asset today, I commit myself to a 18 apartment. Yes or no? Because when I view the land, I think that I have to build the building today itself. I have to exercise the option today itself. Yes or no? But I have an option exercise also tomorrow. Yes or no? So in that case, if I treat as an option, I put in my mind a flexibility of its usage where the land value jumps up to what? 39.30. Respond. Yes or no? So the land is an asset. Land is an option. Now onwards, in fair value balance sheets, in accounting standards, fair value balance sheet, whenever you come across what? A natural resource which is not developed, if a company is having an undeveloped resource, now don't value the resource as an asset with a predefined benefits or usage, valid as what? Option. By getting more details, a proper value should be made. Everybody follow what I am saying? That's how one should go for a fair value balance sheet. What I am saying? So now tell me, land is an option or asset? Land is an option. Okay, tell me, why this is 36, why this being 39.3? Because here I lock myself to what? 18 apartments. And if I can wait for 1 year, it can either be what? 30 also, the value becomes more. Everybody following what I am saying? What is happening? This is because the value of a vacant land. Now let's come back to the discussion. Construction cost is the exercise price. Let's come to the option terminology. What is construction cost? Exercise price. It will be called as what? A strike price. Because land is an asset on which I exercise what? Construction cost and then sell the apartment. Yes or no? So construction cost is what price here? Exercise price on the option. Yes or no? Land is an option. It gives me option to construct. Yes or no? My land is what? Option. It gives me option to what? Construct. For getting the land, I have to pay a premium. The premium is 39 lakhs. The value of the land is what? Premium for the option to construct a building. Yes or no? So land is an option. For the land I pay a price. No. Till now we say land and building. Land is asset. The land price is what? So much. Land is not an asset. Land is what? Option. To get that option to build a building on that land, I pay a premium at the price of the land. Yes or no? So the price of the land is what? The premium for that option. Yes or no? Land itself is what? Option. When I buy a land, I am paying what? Price for the land or not? The price for the land is what? Not the price paid for an asset. Price paid for what? An option called as land. On that land, I should exercise or not? What is called as exercise? The construction of building. Because what? Exercise. The exercise price can be what? 180 or 340. Here it is what I am saying, it can be based on my decision. Yes or no? But that's a strike price. So I exercise today, after 1 year also available because it is my land only. Respond yes or no? Now, next is, and what is the spot price of the constructed building? 12 lakhs. For the future spot price can be 15 lakhs or what? 11 lakhs. This is FSP and then what? The spot price. Rent is something similar to what? Dividend on the asset. Yes or no? If I hold the land, I lose the dividend. If I have a building, I get what? The dividend. Like how I hold the option to buy the share, what happens here? I don't have the dividend. If I buy the share, I'll be getting what? Dividend. If I have an option to construct, no rent. If I construct what? Rent is received. Is something similar to a dividend on a stock. Yes or no? And we all know the interest rate. Also what? Term. This term is only subject. I have to ask the person. Okay, because anybody will be having an intention for a particular time period. Yes or no? How many years you want to keep it undeveloped? A question should be asked. Okay, that cannot be left hanging over because then we can never value. So how many years you want? That is, yeah, Construction person will not hold the land for 20 years. He may have, depending on market circumstances, maybe having some years, he say, I want to look for 1 year, means then the option time is how many years? 1 year. At the end of the first year, the option will surely expire because anyhow I'm going to construct a building. No. So here you can say, I can keep the land even for 19 years. If you don't say me answer, I cannot value. If you don't say your problem to doctor, I cannot give you medicine. If you don't give me facts, I cannot want a value for you. You should tell me your intention to hold the land for what? How much period? Based on that, I'll be doing the valuation. If you have an intention to hold long, it becomes difficult to value because difficult to forecast what? The expected FSPs. Are you follow what I'm saying? Anybody buying an asset will not wait infinitely to use asset, will at some time use asset. Yes or no? In that case, it depends on when you are going to put to use. That becomes an option period. Everybody following or not, and the value of the land is the option premium or the option price. Everybody understanding? This is one should be valuing the natural resource. This is a very, very good concept, new concept where the entire asset is converted into what? Options, and then it is valued. Please tell me, are you following? Now, in exam, one minute, last minute. Now, this is most logical way of doing it. There's an alternative presentation done in what? Examination. That does not change answer much. Only the probability calculation. Please, 1 minute here. I'll leave you. Okay, now. Shh. You count 120 seconds. I'll complete. Okay. Other 2 minutes. Or 2 minutes. Okay. Now, see. 12 lakhs can become what? 15 lakhs or what? 11 lakhs. Are these three prices comparable or not comparable? This is current, these two are what? Extant. What we did, we made it into what? Extant, and then discuss now. What the exam and other books do is, they make these two into what? Current. That one cannot explain logically, but they make everything into what? Current. So what happens? 15 lakhs plus what? 1 lakh. 11 lakhs plus what? 1 lakh. This is how many lakhs here? 16 lakhs. It becomes what? 12 lakhs. 16 lakhs and then what? 12 lakhs. Please. Can I proceed? Now, tell me. Situation number, FSP, probability, and then what? Expected FSP. Please participate. We'll write it next class. What are two situations? 1 and then what? 2. What is situation number 1? 16 lakhs. Situation number 1, 12 lakhs. What is the probability? P. What is the probability? 1 minus P. It is going to be what? 16P and then what? 12 into 1 minus P. That gives you what? 16P. Plus 12 minus 12P. Up to this understanding. Now, next is future value of spot price is equal to 12 lakhs spot price into what? 1.09. Gives how much here? 13.08 lakhs. In the future value of spot price, 13.08 lakhs. Can I equate these two or not? Yes. Tell me what is the number here? 16P minus 16P plus 12 minus 12P is equal to 13.08. 4P, yes or no? 4P is equal to what? 1.08. P is equal to what? 0.27. 1 minus is equal to what? 0.73. Both will give you what? Same answer. Here the rent is calculated present value, net of against what? Spot price, or added to what? FSP. Both will give you what? The same answer. One in the prices should be what? Consistent for calculation. That's how the exam has done the solution. Everybody following or not? No. But our answer is much more logical and explainable, consistent with the risk utilization model.